Hey, lovely trades. I wanted to do a video analysis update of the stock market. We'll talk about big tech like the Nasdaq, QQQ, as well as Apple, Microsoft, Nvidia, Facebook, advanced micro devices. We'll talk about IWM and IJT, the small caps, as well as financials in XLF and industrials in XLI. We'll talk about Berkshire Hathaway, Berk B, Disney, JetBlue, PENN, National Gaming, and Draftkings, as well as AMC. Really hit that reopening theme. We'll talk about uranium stocks. We'll talk about clean energy stocks like First Solar, Next Area Energy, Tesla, NEO, XPEV, and Li Auto. We'll talk about the ARKK ETF, the IPO ETF, ROKU, TWLO, Riot Blockchain, Bitcoin, and Ethereum. So let's get right into it. Here's the Nasdaq QQQ. From this low that we formed in March, we have a wave 1 and a wave 2. We go on a wave 3 impulse, and then we pull back to the 23.6% retracement to put in wave 4. So if we're above 352, that's the wider invalidation. If we're above that level, we're within a wave 5 higher right now. The length of wave 1 in orange or the length of wave 1 in black placed at the wave 4 low gives a minimum wave 5 target of 387, a more conservative, in my opinion, more accurate wave 5 target of 397. The reason that there's two price targets is because the length of wave 1 placed at the wave 4 low is how you get a wave 5 target, pretty conservatively. So someone could have counted this as a 1-2-1-2 Elliott wave nest. In that case, we would use the orange line. I think that the black line is actually the length of wave 1 placed at the wave 4 low. So this is all wave 1. That's wave 2. This is wave 3 and wave 4. The length of wave 1 placed at the wave 4 low. We'll take the Nasdaq QQQ to 397, provided, of course, we hold above 352 in the bigger degree. And on the smaller degree, if we're saying that this is a wave 5 in progress, we can probably say that's wave 1 of wave 5 and wave 2 of wave 5. So if we're above 359, waves 3, 4, and 5 of wave 5, we'll take the Nasdaq up to 397. Is it a great idea to chase the Nasdaq up to 397? Probably not, but let's talk about what would happen when it gets there. So the Nasdaq reaching 397 is a big damn deal because that's the length of the entire rally from the March low to the September high placed at the September low. So the length of wave 1 placed at the wave 2 low has been a minimum wave 3 target for a while now, and we're getting close to it. So what happens when the Nasdaq reaches 397? Well, we're going to look for it to end a wave 3. Even if the Nasdaq rips past 400, right? Even if it goes past 397, I still think 397 would need to be retested in the future. Okay, so what I'm expecting right now, the length of wave 1 placed at the wave 2 low, wave 3 ends at about 397. It doesn't go much further past that. We'll have a shallow and sideways wave 4 correction, and the Nasdaq QQQ will go sideways. It will give up some of its leadership that it's had for the past 2 quarters. We'll see some small caps, some growth stocks, maybe even some industrials emerge as leaders in the coming quarter, perhaps the next quarter. But what's important is that even when the Nasdaq goes on another leg higher and reaches 397, I'm looking for a correction, but I'm not looking for a crash. I'm looking for a shallow and sideways wave 4 correction before we go on a wave 5 higher. I think QQQ will digest these gains before we go on another leg higher. I think Apple is kind of the one tech stock that still got more upside, but that Facebook, Microsoft, and Nvidia, they're very similar to this, that we're at, a pretty important wave 3 target. We'll reach 397, go sideways for a little bit and then digest these gains. And when everyone has fallen asleep on big tech, we'll resume that outperformance for this wave 5 higher. We'll talk about what that looks like with Apple right now. Here's Apple on the smaller degree. It has a wave 1 and a wave 2, a big wave 3 that we anticipate, and we pull back to the 23.6% retracement. I think we put in wave 4 at 141, and we're within a wave 5 higher right now. The length of wave 1 placed at the wave 4 low gives a minimum wave 5 target of 162. So it looks like we're still within a wave 5 higher right now. And if we zoom in, we can kind of see 162 might be a little conservative because I think this is wave 1 of wave 5 and wave 2 of wave 5. So either way, Apple needs to hold above 141. And if it does, we can see waves 3, 4, and 5 of wave 5 take Apple a little higher than 162. So let's talk about Apple's kind of full count right now. We'll zoom out to the 2-year chart. I think the most important place to start and what really is going to take us the furthest is this cycle from the September 21st low. This is literally a quad witching date. I think this is a wave 1 and a wave 2. So Apple's within wave 3 right now from the September 2020 low. Wave 1 and wave 2. Wave 3 at the very minimum should be the length of wave 1 placed at the wave 2 low. That would actually take Apple to 158, and we haven't reached 158 yet. We've gotten pretty close, but I still think wave 3 is in progress, and I think we're actually going to go past 158. We might even go past 162, and that this wave 3 will end at the 161.8% extension of the wave 1 that Apple forms from September to early January. in 2021. So this is all wave one, and that's wave two. The 161.8% extension of wave one is a wave three target of 171. So even when Apple gets to 162, which is the conservative place that this wave three will end, but the more aggressive, kind of more accurate place that wave three will end is all the way up at 171. Even when Apple gets between 162 and 171, I'm looking for a consolidation. I'm looking for a correction, but I'm not looking for a crash. I'm looking for Apple to go sideways for a little bit, complete a wave four, and then go on a wave five higher. Eventually, that's when I would expect this wave five higher, that Apple will go reach the length of the entire rally from the September high to the March low, placed at the September low. This is all wave one. That's wave two. The Nasdaq, Microsoft, Facebook, Nvidia, they've gotten very close to reaching that comparable target, and Apple's really the only big tech stock that's really lagged and not done that yet. I think it will do that, in that right now we kind of have the path how we're going to get to 188. This is a wave one from the September low. That's wave two. Wave three will conservatively end at 162. More aggressively, it will end at 171. We'll have a shallow wave four correction and go on a wave five higher. So I've got a lot of upside for Apple as long as it's above 141 in the short term, and that's a pretty tight kind of stop level that Apple will hold above 141, go into the 160s, possibly 170, have a shallow and sideways wave four, go on a wave five higher. So here's what Microsoft looks like. It's, really in my opinion, Microsoft illustrates the worst case scenario for big tech, and it kind of shows how that's not even really that bad. For Microsoft, I think that this is a wave one and a wave two, and now we've reached that equal legs wave three target. If we zoom in on Microsoft, we can see when it makes a new high, it does so with a new high on the relative strength index. So there's a rule in Elliott wave theory that says if you're calling for a wave five, which essentially means you're calling for the end of a cycle, you should see that the wave five makes a higher high in price, but it makes a lower high on the relative strength index. Basically, if there's no momentum divergence, you shouldn't be calling for a wave five. And if we zoom in on Microsoft right now, we can see that it makes a new high in price, and it makes a new high on the relative strength index on the weekly chart. That means most likely 305 isn't quote unquote the top. I think what most likely happens, Microsoft takes one more thrust higher, right? I know it's always one more thrust higher, but realistically, let's say Microsoft goes on one more thrust higher to 310. We would really be looking for Microsoft to digest these gains. It would be very silly to chase Microsoft beyond the 300s. It's really silly to chase Microsoft right now because we've gone the length of wave one, placed at the wave two low. But that doesn't mean it can't blow off top any further, okay? It certainly can. I think Microsoft could go, really end this wave three at 310, and let's say it stops at 310. What would the worst case scenario be for this wave four? It would be that we have a 23.6 to 38.2% retracement. We would go mostly sideways, have a mostly shallow sideways wear you out wave four, but then what we're still looking for down the road, a wave five higher. So right now, Microsoft is kind of showing how even if big tech makes another high and goes sideways, that's not going to be the super cycle, crash top. In my opinion, that's going to be a wave four correction, and we'll still be looking for a wave five higher that would take Microsoft, a lot higher than the current levels down the road. So Nvidia sends a similar idea. We'll talk about Nvidia on the smaller degree. It might be a nice template for the market in the short term. We have this wave one and this wave two. It blows past the wave three targets. So when it was blowing past this wave three target and it pulled back to the 38.2% retracement, I came out, I said, that's wave four. We're within a wave five higher right now. The length of wave one placed at the wave four low will take Nvidia to 224. And it did, right? So that happened. So I think Nvidia is within a wave five higher right now. If we want to get really tight, this is wave one of wave five, wave two of wave five, wave three of wave five, and wave four of wave five. So wave five of wave five, even if wave four kind of conservatively ends at 214, and I'm not projecting that Nvidia will go down to 214, okay? In Elliott wave theory, corrections are anticipated for, they're not traded, okay? So you don't short Nvidia to 214, but even if wave four ended at 214, I would expect a wave five higher to be at least the length of wave one, placed at the wave four low. Nvidia will go reach 240, and then we're really looking for a 1, 2, 3, 4, 5 waves impulse to end, right? This would be a big level for kind of large cap tech bulls to say, okay, Nvidia is at 240. We should really see this sector digest some of these gains. And with the quad witching date around the corner, I really think what we're going to see is a lot of rotation in the sectors that have really lagged, Nvidia and Microsoft and Facebook. But let's talk about these large caps first. Here is Facebook. It's a wave one and a wave two, then another wave one and another wave two. So this is an example of that RSI rule. We said that when we made a new high in price, we were also doing so on the relative strength index, and we erased this momentum divergence, so we couldn't count this as a wave 5, and so this correctly predicted that we were going to see more upside for Facebook. So this was wave 1 and wave 2, that was wave 3. We pull back to the 38.2% retracement, and in my opinion, we put in wave 4. The length of wave 1, placed at the wave 4 low, will take Facebook to 425, and that's going to be a pretty important level. That's going to be a pretty aggressive wave 5 target. But let's zoom out on the larger degree and talk about what Facebook, very similar to Microsoft, would look like even when Facebook goes past the length of wave 1, placed at the wave 2 low. You know, it's in the 408 to 425 range, right? I'm looking for wave 3 to end, but I'm not looking for a crash. I'm looking for a shallow and sideways wave 4 consolidation, really just big tech digestion, really some small caps to outperform, some industrials to outperform, some growth stocks to outperform, while big tech consolidates these gains and then goes on another leg higher. So Microsoft, Facebook, Nvidia, the Nasdaq, the point is I'm looking for another leg higher in a correction, but I'm not looking for another leg higher in a crash. I'm looking for some sideways, shallow wave 4, some, small caps to outperform during this time, some growth stocks to outperform during this time, and then eventually the next leg up, for big tech will come. Okay, so that's Facebook. Let's talk about AMD. It's a nice template for the market right now in the short term and the long term. It's a beautiful chart. We'll talk about the big picture right now. I'm sorry if this is a little ugly, but this is the wave 1 and a wave 2. Huge wave 3 impulse. Then we pull back to the 38.2% retracement we put in wave 4. So we came into this quarter and we said that wave 5 would either be the length of wave 1, placed at the wave 4 low, and advanced market devices has already reached that. I actually expect the length of wave 3, placed at the wave 4 low, is where wave 5 will end. So we'll zoom in on a smaller degree, how we might get to 136. I think the count for AMD looks something like this, where this is a wave 1 and a wave 2, and then this is a big old wave 3. We pull back to the 50% retracement and we put in a wave 4. So right now, if we're calling this a wave 4, we shouldn't see advanced market devices go below 98. Because wave 4 typically won't go past the 61.8% retracement. If AMD did go lower, there would still be a lot of kind of chance for more upside because we could call this another wave 1 and another wave 2. That means that calling this a wave 3 and a wave 4 is actually pretty conservative. So what's the most conservative view of AMD? That it's going to go on a wave 5 higher. There will be at least the length of wave 1, placed at the wave 4 low. We'll see another new high for advanced market devices. I've had AMD going to 136 by the end of the year, being very aggressive by the end of the first quarter of 2022, being very conservative. Those are both looking good. And I think right now we have the path, how we're going to get there. That's wave 3, that's wave 4. The length of wave 3, placed at the wave 4 low, takes AMD to 138. We don't want to see 98 go, but even if it did, we'd still have, kind of some room to call this another wave 1 and another wave 2. Still looking for an explosive wave 3 to the upside. But still, I think AMD is going to hold above 98. It's at the 50% retracement. I think it will go at least the length of wave 1, placed at the wave 4 low, and make a new high. More realistically, I think it will go the length of wave 3, placed at the wave 4 low. And by the end of the year, it's going to go reach my 136 target, go reach 138. It's unlikely the stock market will crash during that time. EWJ, this is an ETF full of Japanese large cap stocks. I only talked about this in May and June as evidence that the stock market wasn't going to crash. And then just recently, we got a big breakout. So I'll talk about this again. I haven't talked about this in a little bit. It's just in the evidence bucket. But I had in May and June that this was a wave 1, that was a wave 2, and this was a wave 3. So this is, an ETF full of large cap Japanese stocks. EWJ had a big breakout this week, and I believe that this was a wave 3 that ended at 72, and then wave 4 ended at exactly, literally to the penny, the 38.2% retracement of wave 3. So I said that was a wave 4. We would go the length of wave 1, place at the wave 4 low, and go on a wave 5 higher. I said that back in May, in early June. Right now, we started to break out above this wave 3 high. So the wave 5 target is the length of wave 1, placed at the wave 4 low. We should see EWJ go up to 81 towards the end of the fourth quarter, towards the end of the year. It's unlikely the market will crash during that time, and this wave 5 is everywhere. We're about to do 10 charts in a row that's this exact same wave 5, where the length of wave 1, placed at the wave 4 low, then ended at the 38.2% retracement, gives a pretty reliable target of wave 5. So I think that EWJ is one of many that will hold above the wave 4 low of 65 and go on a wave 5 higher to 81. and this is just everywhere. Let's talk about the Russell 2000, because if there's one thing that's very similar to last September's quad witching, is that the small caps look ready to really pick up the pace, really to get some leadership flown back into them. So for IWM, this is a wave 1 and a wave 2, right? It's that exact same September quad witching date, right? The bears think that IWM is the weakest sector. Then all of a sudden, new quarter, new leaders, and we go on this huge wave 3. We pull back to the 23.6% retracement, and I don't believe IWM will go below 208. The wider invalidation is the 38.2% retracement of 195. I think we'll hold both of those levels and go the length of wave 1, place at the wave 4 low, and we'll see 2.5, 3 months, very conservatively, in my opinion, the end of the quarter, the fourth quarter, we'll see IWM hold above 207, 208. With 195 invalidating, and we'll go on a wave 5 higher to 266. I think that we have a leading indicator right now in the small cap sector, and we see that that's going to be from the IJT small cap growth. So it actually looks almost identical to the Russell 2000, but this is actually small cap growth. Very similar chart. This is wave 1 and wave 2. This is a wave 3 and a wave 4 that ends at the 23.6% retracement. So I want to see that IJT will hold above 119 with 113 invalidating, but I think the growth portion of the small caps, they're acting as a leading indicator right now. They're already breaking above these wave 3 highs. I think that IJT will confirm that this wave 4 low has been put in at 119. The length of wave 1 placed at the wave 4 low will take IJT to 154, while IWM is going to 266. That's all going to happen by the end of the fourth quarter of 2021. And this is fitting in with the idea that while kind of some of the large cap tech is digesting those gains from this summer, that we'll see the small caps kind of outperform. Some of those sexier small cap stocks will start to outperform. Let's talk about some, financials, some industrials. I think that these might be the two most important charts of the market, XLI and XLF, especially XLF. I mean, this is just gorgeous. It's a wave 1 and a wave 2. Wave 3 passes the 161.8% extension of wave 1. Why is that important? Well, when you pass the 161.8% extension of a wave, you really confirm that it's an impulse structure, right? So you shouldn't be calling this an A, B, and C that passed the 161.8% extension. This is clearly, in my opinion, a wave 1 and a wave 2 and a wave 3 that ended at 38.60. We pull back to exactly the 38.2% retracement, and we put in a wave 4 at 34.90. So right now, bears, if you want my attention, get XLF, $3 or $4 lower below 34. Okay. If you do, then you'll, invalidate the idea that wave 4 is already in right now. If you don't, then you're still noise. Okay. The length of wave 1 placed at the wave 4 low says XLF is going to go to 43. And that really should happen in the next 2 months, 2.5, 3 months at the absolute max. I'm looking for a wave 5 higher. The length of wave 1 placed at the wave 4 low says XLF will not go below 34. It will go all the way to 43. Unlikely that the stock market will crash during that time. It's also kind of emblematic of, some of these, banks and tanks, these boomer stocks that haven't done anything all summer. They're going to get some leadership flown back into them. So here's XLI, very pretty chart. Wave 1 and wave 2, big wave 3, and an ABC correction ends wave 4. So we have to be a little tighter with this one. The 38.2% retracement of 98 isn't far away. The 50% retracement of 95 is kind of a wider, pure invalidation. I think both of those will hold, and XLI will go the length of wave 1, place at the wave 4 low, go on a 6 to 8 week, 2.5, 3 months, very conservatively rally to 114. That's wave 1. And that's wave 2. This is wave 3 and wave 4. The length of wave 1 placed at the wave 4 low, while XLF is going to 43. XLI most likely will be going to 114, and it's unlikely the market will crash during that time. Berkshire Hathaway, BERK-B, largest holding of XLF. Prettiest count in this video, to be honest. That's a wave 1 and a wave 2. This is a wave 3, and an ABC correction ended wave 4 between the 23.6 and the 38.2% retracement. So I think right now, wave 4 is in at 270, and the kind of, 38.2% retracement is 266. That's not very far away. Bears, I'm not asking much. Get Berkshire Hathaway below 266 and 270. You'll have my attention. But I think what's really going on, we're within a wave 5 higher right now. The length of wave 1, place of the wave 4 low, will take BERK-B to 310 very conservatively for a wave 5 target. And if we look at the smaller degree count, we can kind of see why that might be conservative. It looks like this is a wave 1 and a wave 2. Waves 3, 4, and 5 of wave 5 will take BERK-B past 310 most likely. It's unlikely the market will crash, while BERK-B and XLF, are going on rallies higher. So that's kind of the general theme. It's an evidence-based approach. Disney, we're finally starting to see some of these travel and leisure stocks take form. We'll talk about PENN and Draftkings and JetBlue in this video. Here is a wave 1 and a wave 2 for Disney. Huge wave 3. ABC correction ends wave 4 right around the 38.2% retracement. So the length of wave 1 placed at the wave 4 low is a conservative wave 5 target of 216. Okay, only a fool would short Disney at 216 because that's the wave 5 target. Okay, wave 5 can certainly go past this level, okay, but very conservatively it will go the length of wave 1 placed at the wave 4 low. We'll see Disney go past 167. It will reach 216 very early into the fourth quarter, and that's where kind of bulls, especially value bulls, will say, okay, that's 1, 2, 3, 4. We'll look for wave 5 to end a large degree wave 1 and then have the buying opportunity of a lifetime. But that doesn't mean you short Disney at 216. That means hypothetically a trader takes profits and then looks to buy what in my opinion will be a generational opportunity for this correction. This will be 1, 2, 3, 4, 5 waves from this low, and then that's when, you know, it's farm betting time. But anyway, that's Disney. I think it holds 167, heads to 216 and a little beyond 216 to be honest, in pretty short order. Definitely early into the fourth quarter in my opinion. Let's look at JetBlue. I think JetBlue right now, this is probably the most accurate way to count it. That this is a wave 1 and that's a wave 2, and then this big rally from July to early April is another wave 1. And I say that because we pull back for wave 2 at the 61.8% retracement. So we'll go over the aggressive count right now. The aggressive count right now for JetBlue, this is a 1-2, 1-2 Elliott wave nest. So the length of this wave 1 rally placed at this wave 2 low gives JetBlue a wave 3 target of 26. Okay, so I've been wrong about the airlines this quarter. I was right about most everything else, but I was wrong about the airlines this quarter. Still, though, I am expecting that they're going to get more upside. If it's not, you know, in the third quarter, it will certainly be in the fourth quarter. We talked about XLF going to 43, XLI going to 114. The banks and the tanks, they're going to make a comeback. They're going to get some of that money from Nvidia and Facebook and Microsoft and QQQ, in my humble opinion. Okay, but this is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low. We'll take JetBlue to 26. Okay, that's going to be wave 3. Then we have a shallow wave 4 correction and go on a wave 5 higher. So that's a pretty aggressive view of JetBlue, that getting to 26 is just a minimum wave 3 target. Do we even need to be that aggressive? No. Okay, we don't need to be that aggressive. The more conservative view of JetBlue is that this is a wave 1 and a wave 2, and that this is a wave 3 and a wave 4 that just so happened to go to the 61.8% retracement and just so happened to go past the wave 1 high. Okay, so this is wave 1 and wave 2. Conservatively, this is wave 3 and wave 4. So wave 5 actually can be the length of wave 3 placed at the wave 4 low. We'd still be looking for JetBlue to go to 26. The more conservative view of JetBlue, at the very minimum, is that this is a wave 1 and wave 2. This is wave 3 and wave 4. So the length of wave 1 placed at the wave 4 low is where JetBlue is going to have a minimum wave 5 target. We should at least see JetBlue make a new high and go up to 23. I don't think the 78.6% retracement of 12.34 will get broken. And I think that this is actually a 1-2, 1-2 Elliott wave nest. But even in the more conservative view, we're still looking for another high. The most conservative price target is that it will be the length of wave 1 placed at the wave 4 low. I think the more accurate view is it's going to be the length of this rally from June to April placed at this wave 4 low. JetBlue holds 12.36, heads into the 20s in the fourth quarter, possibly higher. Here is PENN National Gaming. This is really just to kind of reiterate that the reopening stocks might have a more upside than what I've kind of previously laid out. Okay, so for PENN National Gaming, we have a wave 1 and a wave 2, and then we have this huge rally, this huge wave 3 rally that, to be honest, is actually going to be a conservative count. It's very conservative to say that this is a wave 3 and this is a wave 4 that ended at the 50% retracement. This very well could be another wave 1 and another wave 2. We don't even need to make that argument. Right now, if we say that this is a wave 3 and this is a wave 4 that ended at the 50% retracement, we shouldn't see PENN National Gaming go below 61. Okay, if it doesn't go below 61, at the very minimum, we should expect that a wave 5 will take PENN Gaming above the wave 3 high of 142. I mean, and that right there is kind of like, we could see, a more aggressive rally in the travel and leisure stocks right now than I think a lot of people, including myself, are expecting. Because if PENN breaking to the wave 3 high is the minimum wave 5 target, then Disney and the airlines, we might have a huge reopening headline coming soon or something like that, because this is looking ridiculous that we're going to hold above 61 and then the minimum wave 5 target would take PENN above 142. But it's not that ridiculous. If we turn on the trend spotter indicator, we kind of have an objective view right now. The daily trend spotter has been bearish on PENN since the middle of March. Okay, so it's kind of that same idea where a lot of these stocks, they haven't done anything since March and they're getting ready to resume their leadership. And now the trend spotter, which has been bearish on PENN for the past 6 or 7 months, is flipping the bullish and staying bullish right now. So there is kind of an objective view that we have started a new bull market in some very important reopening stocks. And at the very minimum, if PENN Gaming is above 61, then the minimum wave 5 target by definition will take it to 142. I think that's going to happen in the next quarter. More conservatively in the quarter after that, right? The end of the first quarter of 2022. But I think that PENN Gaming, Draftkings, we'll look at in a second, they're kind of going to show we might be being too conservative on reopening stocks. So let's look at Draftkings right now to kind of reiterate that point. Some of these gambling names are forming clear impulses. So we'll just stick to the short-term view of Draftkings right now, that this is a wave 1 and a wave 2 that it forms from this May 13th low. So basically all the growth stocks make this May 13th low, and then Draftkings, in my opinion, forms a wave 1 and an ABC correction puts in a wave 2 low. The 161.8% extension of wave 1 is 65. That's where I would expect a wave 3 to kind of end. And then we have a shallow and sideways wave 4 before we go on a wave 5 higher. So right now, if Draftkings is above the wave 1 high of 56, ultimately I'm expecting that a wave 5 higher will take place that takes it to 75. And that's because the length of wave 1 placed at the wave 4 low gives a wave 5 target. So Draftkings and PENN, they're forming impulses right now. Especially Draftkings, this is a pretty clear impulse. Wave 1, wave 2, wave 3 is going to be basically confirmed that this is the wave 3. Once we're past 65, 66, we have a shallow wave 4 correction and we go on a wave 5 higher. The length of wave 1 placed at the wave 4 low will take Draftkings to 75 very conservatively. And I think right now it will hold above 56 and do so. Draftkings and PENN, they're in that evidence bucket that we could see in the fourth quarter some reopening stocks come to life. AMC Theaters, this sounds like a joke. I promise it isn't. This is the meme stock, but it's also a reopening stock. It's a wave 1 and a wave 2. Big wave 3, right? Pitchforks are so silly. You connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, and what happens? Okay. Also, the institutions were all over AMC Theaters, all over the bar chart, straddle, and strangle screener. I got the pictures that AMC was taking up every slot on the bar chart, straddle, and strangle screener during this time, okay, right before this massive explosion. The only reason I bring that up is, one, because they told you guys Redditors did that, but two, because AMC is back on that screener again, and it looks like it's resolving to the upside again. I think this is a wave 1 and this is the wave 2. Just like PENN Gaming, it's actually very similar, that this is a wave 3 high that is actually very conservatively a wave 3. This could be another wave 1 and another wave 2 because we're ending at the 61.8% retracement. Just like PENN, we don't even need to make that argument. I think AMC Theaters will hold above 28 and go on a wave 5 higher right now. The minimum wave 5 target by definition will take AMC Theaters above 72. So a lot of people right now, they expect that the stock market's going to crash, and kind of the more, accurate view, in my opinion, is that we're about to have meme stock season. We're about to see some of the trashiest companies in the market have pretty dramatic, eye-popping rallies. So I think that could be interesting. It's another one where we can turn on the trend spotter objectively and see that this is kind of a new thing developing on the daily chart. For PENN and for Draftkings, this is, tracking it pretty well. And I think we're going to go on a wave 5 higher pretty conservatively. We're going to break above this high of 72, and that's a minimum wave 5 target. So AMC Theaters could have a lot more upside. Yes, it's a meme stock, but it's also a reopening stock, and it's sending a pretty similar view to PENN Gaming, that the reopening stocks might have a more explosive rally than, to be honest, even I'm expecting. So here is the chart of the Uranium ETF URA. I talked in, my video on Monday that I thought the uranium stocks were a big breakout that a lot of people missed. They continued on that breakout this week. URA, this is a clear wave 1 and wave 2. This is a wave 3 and a wave 4 that ended at the 38.2% retracement of wave 3. So I'm expecting a wave 5 higher to be the length of wave 1, conservatively placed at the wave 4 low. We've already passed that level. URA most likely will go the length of wave 3, placed at the wave 4 low, go on a wave 5 higher to 30.60. I'm saying that I think that this is a leading indicator right now for the kind of the oil stocks, the industrial side of the market that we saw. The uranium stocks, they kind of led this sector for a while now, and now I think that this week we had this huge breakout for the uranium stocks, and that might be kind of a leading indicator for oil and more industrial plays that I'm also expecting will go on a wave 5 higher. For URA, the length of wave 3 placed at the wave 4 low, will take this ETF full of uranium stocks all the way to 30. For UUUU, I talked about on the July massacre why I was going to buy UUUU. I've got an average cost, I think, about 4.50 on shares. It was in the long-term video. I said I was going to buy the July massacre. It's looking very good right now. That this is a 1, 2, 3, 4, 5 large degree wave 1. I said the length of wave A placed at the wave B high is where wave C ended. So that's why I was going to buy it at the 50% retracement. And then the length of wave 1 placed at the wave 2 low is going to take, in my opinion, energy fuels all the way to 11. Very unlikely the market crashes during that time. I think that this is a harbinger right now that we're going to see the industrials, we're going to see the oil stocks. They're going to start to play follow the leader. They're going to follow these uranium stocks, and that's not really even the bulk of the evidence, but the uranium stocks, recently at least, have been a leading sector for the oil play. Speaking of energy, I think uranium fuels will hold above this wave 2 low of 4.32, go on a wave 3 rally that will be the length of wave 1, placed at the wave 2 low, and go all the way to 11. I'm going to continue to talk about UUUU as a long-term idea. Let's talk about some clean energy right now. First Solar is looking very impressive right now. From this low that FSLR formed on May 11th, right? Every growth stock, it's May 11th, it's May 12th, or it's May 13th, I promise. But for FSLR, this is the exact same January 25th high that Tesla, Next Era Energy, and the TAN Solar ETF all form together. And what we're going to see pretty soon, in my opinion, is that First Solar and Next Era Energy, they're going to break above these highs from January. So First Solar, this is a wave 1 and a wave 2. The 161.8% extension of wave 1 says that this 1, 2, wave 3 will end at 112.90. And as you can see, that's going to be past the wave 1 high. Confirm all of this is institutional accumulation and institutional buying, and that this sector has been accumulated by the big money for about 8 months, about 9 months. They've been chomping at the bit to buy this sector, and now they're going to get ready to let those gains explode in the fourth quarter. So I think First Solar, that's wave 1 and wave 2. Wave 3 is going to take it to 112. And then that's when clean energy bulls, they get to drink a glass of wine, because that means that Next Era Energy and First Solar are going to be above the January 25th high. And then, one by one, NEO's going to be next, then Tesla, then, all the clean energy stocks. They're going to tell us that January to February was a very important high, and it is going to be broken for most of the clean energy stocks. The larger degree view First Solar says that this is a big old breakout. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. We're about to confirm we're within a wave 3 of wave 3 when FSLR is above 112.50. So it's looking very good. It's looking really good. This is Next Era Energy. It's another one. It forms this exact same January 25th high. It has a wave 1 and a wave 2. It's getting close. The 161.8% extension of wave 1 is that wave 3 target, which is 89. And just like First Solar, that's going to mean that Next Era Energy is above the January 25th high. I pointed out in 2 videos ago that these dates, that besides this date on April 16th, each of these dates is the exact same for Tesla. This is the same date that Tesla makes a high. The same date Tesla makes this same low is on March 5th. And then for Tesla, this wave 1 high is made on April 14th. For Next Era Energy, it's made on April 16th. And then they both make a wave 2 low on May 19th. I think First Solar is kind of giving us a sneak peek. This is what Tesla's about to look like. It's going to go on a wave 1, 2, 3 to the upside, go break above that exact same January 25th high. And then if we see at sometime next week or 2 weeks from now that Next Era Energy and First Solar are above the January 25th high, that is going to be a phenomenal day. A phenomenal day for this channel. Let's look at Tesla right now. Not sure why the Ichimoku cloud is on. I don't want you guys to see that I'm using that. But anyway, this is Tesla right now. This is a wave 1 and a wave 2. Like I said, the exact same dates as Next Era Energy. It's almost even an identical chart. And what we see Next Era Energy do, go on that big impulse all the way to the 161.8% extension of wave 1. Let me make sure we can see what I've got for Tesla right now, that this is a wave 1 and a wave 2. Wave 3 will take it to the 161.8% extension of 929. We have a shallow wave 4 correction and go on a wave 5 higher. But First Solar and Next Era Energy and Tesla, them getting to the 161.8% extension is a big deal, because each of those levels will take it above the January 25th high. And the more clean energy stocks that are above the January 25th high, the more we're going to know the big money has been accumulating the crap out of the sector for a very long long time. On the larger degree, Tesla forms a wave 1 and a wave 2, huge wave 3, and a wave 4 that pulls back to the 38.2% retracement. So the length of wave 5 will either be the length of wave 1 placed at the wave 4 low, or the length of wave 3 placed at the wave 4 low. I think it's going to be the length of wave 3 placed at the wave 4 low, because if it was the length of wave 1 placed at the wave 4 low, Tesla wouldn't make a new high. I think the wave 5 will be the length of wave 3 placed at the wave 4 low. Tesla ultimately is going to 1,370. Aggressively, that's going to happen by the end of the first quarter of 2022. It sounds crazy until it doesn't, but this is going to be wave 1 and wave 2, waves 3, 4, and 5 of wave 5. I think that's going to be what takes Tesla into that 1,300 range. Wave 1, wave 2, wave 3 will take Tesla above 929. We'll have a shallow wave 4 correction and go on a wave 5 higher. If you're a Tesla bull, watch Next Era Energy, watch First Solar. If they break above these January 25th highs, you can probably celebrate a little early. Here is NEO and XPEV. I love NEO's short-term view. It's just another one, right? How many of these growth stocks formed this exact same low on May 13th? I think Advanced Market Devices has shown us what is going to end up playing out from that. But this is NEO. It's a wave 1, an ABC correction, putting a wave 2 low. You could call this an ABC correction, or more A, B, C. It's the same thing. It's a 61.8 to 78.6% retracement. And I think right now we're ending wave 2. This is wave 1 and this is wave 2. So we're going to see NEO, importantly, not break below 30.71. We're going to see NEO hold that level, confirm it's within a wave 3 right now. The 161.8% extension of wave 1 is going to take NEO to 70. That, very conservatively, in my opinion, will happen in the fourth quarter. That we're going to see NEO hold above 30.71, go to the 161.8% extension of wave 1, reach 70, have a shallow wave 4 correction, and go on a wave 5 higher into the 90s. But right now, NEO above 30.71. I expect that by the end of the fourth quarter, we're going to see that NEO's gone at least to 70 for this wave 3 target. So that's NEO. It's another one, another May 13th low. XPEV and Li Auto, these are really just in the evidence category, but I think they're firming up right now. They're all over the bar chart, straddle and strangle screener. We know they're going to have a big move. We know NEO's going to have a big move. We know Tesla's going to have a big move. We just have to figure out which way is it going to be. I think that this is a wave 1, an ABC correction putting a wave 2 low. This is a big old base from the IPO high, and that the big money has been absorbing the supply the entire time. And that this stock is very recent into its IPO, in my opinion, forms another wave 1 and another wave 2. It's within wave 3 of wave 3 right now. That's going to take it up to 80. We'll have a shallow wave 4 correction and go on a wave 5 higher. I continue to like XPEV more as a long-term idea for myself personally. But it's also in the evidence category that it's not just going to be NEO. It's not just going to be Tesla. It's going to be the entire clean energy sector. In my opinion, XPEV and Li Auto, they're going to hold these Ichimoku Cloud breakouts. Like I've talked about, this kind of being the risk management, that we're going to hold the daily Ichimoku Cloud breakout and go head to that IPO high for confirm that this is all institutional accumulation, and go waves 1, 2, 3, 4, and 5 to the upside. Those 5 waves will all become part of a larger degree wave 1. So we've talked about how the risk reward ratio for recent IPO stocks is a lot higher. And for Li Auto and XPEV, it looks like we're going to see the reward play out for those two. Here's Li Auto. This is another wave 1 and ABC correction puts in a wave 2. And now we have Li Auto and XPEV moving step for step. That this is another wave 1 and another wave 2. I think Li Auto and XPEV, they're going to go break above this wave 1 high that they formed in November. And the length of wave 1 placed at the wave 2 low will get replicated. We'll see Li Auto go to 49. We'll see XPEV go to 80. And we'll see both of them hold above the Ichimoku Cloud on the daily chart. Confirm these breakouts, get this big old cloud bounce and head into the 50 range. More importantly, confirm that this is all institutional accumulation. This is the wave 3 in progress. And these two that I've always liked as longer term ideas are going to start to really reward the patient. So that's Li Auto, that's XPEV. Let's talk about some growth stocks right now. We've been talking about growth stocks, but let's talk about the Cathie Wood ARK ETF. Let's keep in mind right now, this February 16th high is the exact same high that Square Cash and ROKU, which are holdings of this ETF form. I believe that this is an ABC correction, and that from this low, we have a wave 1 and an ABC correction puts in a wave 2 at the 50% retracement. So the 61.8% retracement is 110. If we're above 110 to 113 for ARK, I think this is a wave 1 and a wave 2. The wave 3 target is the 161.8% extension, which is 154. We have a shallow wave 4 correction between the 23.6 and the 38.2% retracement. Then we go on a wave 5 higher. This is the length of wave 1, placed at the wave 4 low. I expect that all 1, 2, 3, 4, 5 waves from this low will take ARK to 175 within the next 4 to 7 months. And if you can tell that those dates are based on quarterly expirations, so aggressively, I think that by the end of the January quad witching, we'll see 175. More conservatively, the March quad witching. But I'm looking for 1, 2, 3, 4, and 5 waves to the upside. The length of wave 1, place of the wave 4 low. We'll take ARK all the way to 175. Sorry, that quad witching date is in December, my bad, but still 4 to 7 months from now, I think that this is going to be a wave 1, wave 2, wave 3, 4, and 5 that takes ARK to 175. I think that it will hold above 110 in the meanwhile and confirm this is a wave 1 and a wave 2. We're within a wave 3 higher right now. Let's talk about IPO. This is just another, it's almost identical to ARK, but it's just a ETF full of stocks that have recently IPO'd. It's really identical to a lot of the growth stocks that we've talked about. It's almost identical to ARK, which we just talked about, but it fits in with this idea. Recent IPO stocks. Okay, what do you think? You think sexy stocks? You think growth stocks? You think small cap stocks? And that's kind of the idea that I'm looking for, that those kind of names really start to outperform. So this is IPO, an ETF full of stocks that have recently IPO'd, right? Growth stocks, some small caps. This is a wave 1 and ABC correction puts in a wave 2 low, right? Surprise, surprise. It's the May 13th low. We form a wave 1 and ABC correction puts in a wave 2. And now I think that we're going to hold above 60 for this wave 2 low. Sorry, we're going to hold above 59 for this wave 2 low, go on to waves 3, 4, and 5 higher. The wave 3 target is the 161.8% extension, which is 76. We'll have a shallow wave 4 correction. We'll go on a wave 5 higher. The length of wave 1 place of the wave 4 low, which in my opinion will end between the 23.6 and 38.2% retracement of wave 3, says that in the next 4 to 7 months with ARK, I expect that IPO will go on a waves 1, 2, 3, 4, and 5 higher that will ultimately take IPO to 85. It really fits in with this idea that growth stocks, small caps, some of the sexier names are going to become in vogue again, and then calling yourself a tech investor, with the exception of Apple and some semiconductor stocks, might cause you to underperform. So here's ROKU. ROKU, like I said, it's in the ARK ETF. It forms this exact same high on February 16th, and I think it already broke above this high. So let's talk about ROKU on the larger degree, that this is the wave 1 and a wave 2. A wave 3 is this huge impulse, and I think it's going to be replicated in time and price. And we take the length of wave 3, place it at the wave 4 low. We have a wave 5 target of 707. Now, when I talked about ROKU, it was in the 320s, the 340s, I think. And then I talked about ROKU when it had 0% implied volatility, ranking percentile, then has this explosive breakout above this wave 3 high. I think that this is wave 1 of wave 5, and we're ending wave 2 of wave 5 right now. So waves 3, 4, and 5 of wave 5, they're going to take ROKU into the 707 range. And we can kind of see right now that if the 161.8% extension of this big wave 1 is the wave 3 target, then yeah, we definitely could see 707, which is going to be the length of wave 3, placed at this wave 4 low. Now, it's pretty interesting for ROKU that we end wave 4 at exactly the 50% retracement. So those are the algos they're playing with you right now, because what this definitely could be is that this is a wave 1 and that's a wave 2. We'll know who's right when we get to the equal X target. If we go past 707, then this has to be another wave 1 and another wave 2. So that means that 707 would be the minimum wave 3 target. We have a shallow wave 4 correction. We still look for a wave 5 higher. So yeah, as wild as it sounds, this is actually a conservative view of ROKU, that this is a wave 3 and a wave 4 that ended. So if ROKU's above this low of about, where's this low? This low of about 272, then wave 4 is in, and this is a wave 5 in progress. This is wave 1 of wave 5. We're ending wave 2 of wave 5. Waves 3, 4, and 5 of wave 5 will take ROKU very early in the 2022, I think by the end of the first quarter of 2022, to that 707 range pretty aggressively. So that's ROKU. It's looking like a lot of the ARK components. Here's a software stock. I love the software sector. I'm going to talk about TWLO in this video. This is a wave 1 and a wave 2. I actually predict this entire rally before it happens to 444 using that silly equal legs principle. And then we have another wave 1 and ABC correction. We pull back to the 61.8 and 78.6% retracement. So I think that's another wave 1 and another wave 2. We're within a wave 3 of wave 3 right now. The length of wave 1, placed at the wave 2 low, very conservatively, will take TWLO to 500. We have a shallow wave 4 correction. We go on a wave 5 higher. I've kind of zoomed in on the smaller degree to kind of show what I think this actually looks like. That this is from this low that we form at 275, a 1, 2, 3, 4, 5 large degree wave 1. This is an ABC correction that ended a large degree wave 2 at the 61.8 to 78.6% retracement. If we want to be a little tighter, we can use the 78.6% retracement as the wave 2 stop, which is about 305. I don't think any of those levels go. I think the length of wave 1 placed at the wave 2 low gives a minimum wave 3 target. We're going to see TWLO go into the 500s, but this is a 1, 2, 3, 4, 5 clear impulse. An ABC correction now ending at the 50 to 61.8% retracement. TWLO looks like it's going to go begin wave 3 of wave 3 500 is going to be very conservative. We have a shallow wave 4 correction that ends between the 23.6 and the 38.2% retracement, and then we have a wave 5 higher. So TWLO looking very good. Ultimately, very early into the first part of 2022, I think definitely by the end of the first or second quarter of 2022, we see that this is 1, 2, 3, 4, 5 waves that takes TWLO all the way into the 670 range. And so that's looking good. If it's above 305, I think that's kind of the more tight level to trade against. Here is Riot Blockchain and Bitcoin and Ethereum. Riot Blockchain, Bitcoin, and Ethereum, they're looking very good. I think that this is a wave 1, an ABC correction that ended wave 2 for Riot Blockchain. The length of wave A, place of the wave B high is where wave C ended. Now, this was between the 61.8 and 78.6% retracement. So I actually predicted Marathon Patent Group's rally before it happened. So Marathon Patent Group has already passed the 161.8% extension of this wave 1. And that's a pretty big deal because that means that Marathon Patent Group is confirmed to be within an impulse from this low. But Riot Blockchain has not yet accomplished that. I think it's going to play follow the leader and do that next. What I'm trying to show right now is that the 161.8% extension of wave 1 has not yet been reached. But if we looked at the Marathon Patent Group chart, we would see that it has been reached. I think that Riot Blockchain is going to follow Marathon Patent Group. We don't even really need to use Mara because, Cardano and Solana, they're way above, the previous highs from this year. And Ethereum, almost broke above the previous high for this year. But anyway, for Riot Blockchain, this is all a 5, or 6 month rally at the max. And then we have an ABC correction that ends wave 2. So the length of wave 1 placed at the wave 2 low, ultimately, I believe will take Riot Blockchain into the 98 range. From this wave 2 low, I think we form another wave 1 and another wave 2. So on the smaller degree, waves 3, 4, and 5 will take Riot Blockchain, in my opinion, by the end of the year, pretty conservatively. We're going to see that waves 1, 2, 3, 4, and 5 take Riot Blockchain to 65. I think that's going to end up being very conservative. We might just blow up to 98, but the longer time target for that is kind of within the second quarter of 2022, that I'm expecting that the entire length of this rally for wave 1 placed at the wave 2 low has been reached for 98. So if Riot Blockchain is above 20 to 23, I expect that in the fourth quarter, it will reach 65. And in the first half of 2022, pretty conservatively, it will reach 98. So very nice risk reward ratio, in my opinion, for Riot Blockchain. I think it's looking good. I think Bitcoin and Ethereum are also looking good. So we'll talk about them on the larger degree. This is the wave 1 and a wave 2. We've kind of been right about that, right at the 61.8% retracement. We were like, this looks like a pretty good level. We'll talk about the short-term view right now. I think for Bitcoin, from this low, this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So right now for Bitcoin, if we're above the 50% retracement of about 41K with the 61.8% retracement of 38K being the invalidation, then we're going to go see a wave 5 higher that will be the length of wave 3 placed at the wave 4 low. We should see that Bitcoin goes on another leg higher for a wave 5 that takes it above the April high. So I think this is an ABC correction, and this is waves 1, 2, 3, 4, and 5 for Bitcoin. The length of wave 3 placed at the wave 4 low will take Bitcoin to about 65, 67K. We're going to need to see in the short term that Bitcoin holds above 41K to 38K. The long-term invalidation, to be quite frank, is going to remain the low that we formed in June, which is, about 29,000. That was around the 50 to 60% retracement of wave 1. So we're within a larger degree impulse, in my opinion, that will take Bitcoin to 90,000 in the first half of 2022. I think in the shorter degree, this is wave 1 and wave 2. This is wave 3 and wave 4. We'll hold above 41K with 38K kind of being a tighter, a wider stop. We'll go on a wave 5 higher. There will be the length of wave 3 placed at the wave 4 low. We'll go see Bitcoin hit 67K. I think that's going to happen in the next, 2 or 3 months. that we go see Bitcoin make a new all-time high, and we're going to see that 38K, 41K holds in the meanwhile. For Ethereum, right, this is just this idea. This was all wave one. That was all wave two that we put in the middle of June. So this was a generational buying opportunity. If we look at Ethereum right now, from this low that we form, this is a wave one and a wave two. This is the wave three. Now we put in a wave four right at the 38.2% retracement. So for Ethereum, we want to see 2.8K hold with 2.6K being the invalidation level. If both of those levels hold, this is wave one and wave two. This is wave three and wave four. I believe that wave five will be the length of wave three placed at the wave four low. We'll see Ethereum in the next 3 months go to 5.3K. It's important to note Cardano and Solana, they're already above the high from earlier this year. I think Ethereum's next. And once Ethereum's above this high, right, making the bear argument about crypto, you're just going to look silly. But this is 1, 2, 3, 4, 5 waves impulse. I'm expecting the length of wave three, place at the wave four low. We'll take Ethereum to 5.3K. And that's going to happen in the next 2 or 3 months.